If I can borrow your money at 100 grand and pay you 5%, that's 5 grand a year. Meanwhile, I can take your 100 grand, leverage it with the feds at 700,000 and lend it out at 7%. That's a $49,000 income on your money that I'm paying you 5 grand for. So I, the bank, make 45 grand on your $100,000. What is a divestment? What does that term mean? Somebody explain divestment to me. Somebody other than somebody in the lending or the funding department. The opposite of an investment. So, hey, here's 100 grand, manage it for me, send me checks every quarter. Changed my mind, give me my 100 grand back. That's a divestment. I'm pulling out of, okay? Now, the reason that investors are divesting their monies from different platforms is inflation. So things cost more now than they used to. So I need that 100 grand to pay for my kids' college. I need that 100 grand to pay this debt off. For some, it's I need my money back so I can pay off the adjustable rate mortgage that I got against my home, which was at 3%, now it's at 8.5%. This is why divestments are occurring. Now, banks for the last 5 quarters have seen increasing divestments out of their deposits. Now, this is a big problem for banks. Why? No money to lend. Guys, when you put $100,000 in the bank, they can take that 100 grand to the Federal Reserve and get a $700,000 line of credit. So for every dollar you put in the bank, they can borrow 7 from the feds. When you pull your money out, that 7-to-1 ratio is now money they cannot get from the feds. Has anybody been noticing as you're driving down the highway, the signs that say 5.25% return on a CD? Has anybody seen these? They're all over. Look at the digital billboards, okay? Next time you're looking at a financial magazine or email, look, they're offering 5% on a CD. Why would a bank do that? That's a lot. That seems a little reckless, doesn't it? Why would a bank offer that? Because if I can borrow your money at 100 grand and pay you 5%, that's 5 grand a year. Meanwhile, I can take your 100 grand, leverage it with the feds at 700,000 and lend it out at 7%. That's a $49,000 income on your money that I'm paying you 5 grand for. So I, the bank, make 45 grand on your $100,000. Now, there's a catch, a caveat. Read the fine print, always. Here's what the fine print says. 5.25% APR, good on the first $500 deposit. Every dollar over $500 will be paid at 0.25%, which is 1/4%. Nobody reads the fine print. Now, we had a guy stop by the warehouse last week because we have for lease signs and for rent signs, and he comes in and he says, I want to buy the building. Jacqueline talked to him, she said, well, it's not for sale. And then they struck up a conversation about our equity funds and Fund 3 opening this week. Very exciting. And he goes, 5%, I can get that down at a local bank. True, on the first 500. But what are you going to do with the other $99,500? You're going to earn 1/4 point on that?